Happy Thursday. We made it through another week. We almost made it through the first month of 2021, believe it or not, y'all. So salute. I'm looking forward to tonight. Got my guy Mark Brown coming on here. He's going to talk to you guys about financing, FHA, conventional, hard money. Mark is one of the gurus of the finance game. Greg Loper, what's happening, big homie? And then, for those of you who need help, hit the link in my bio, schedule a consultation, get my free, well, not my free, but my credit ebook for $1. And we got some other gems in my bio as well for you guys to check out. We start our boot camp this weekend, teaching people with 9 to 5s how to invest in real estate. So it's another thing I'm super excited about. I appreciate it on the sweatshirt. I appreciate it.
What's going on, good brother? How are you?
Mark, what's happening, man? It's your first IG Live?
I'm good. Nah, not my first one. My first one in a while. I'm not hot on the gram like you are, so I'm trying to get my reps in. I peeped when I was about to get ready. I went to wash my hands, and I noticed my lips was a little bit ashy. So I want to apologize in advance for anybody who's observing the lack of moisturization. I try to throw on some Burt's Bees, but it's just not for me right now.
It's all right, man. He's just glad.
They're like, the bull with the bald head with the ashy lips. He was talking about loans.
It's all good, man. I see you out there in Cali enjoying that West Coast weather.
Yeah, man, it's been a lot of love for me. I figured, normally this time of year we be, meeting up, strategizing for the year, but because of COVID, we can't really get together like normal. So I'm working remotely anyway. I was like, I might as well work remotely from Southern California. But I'm actually flying back into Philly Sunday night because I got a couple meetings that I have to be in town for. So I'm coming back to the Brick City. Oh, Lord. I've been hearing reports that the high is below freezing.
Last couple of days, them Adidas sweatpants ain't cutting it right now.
Oh, man. Look, I went for a walk today, right? And I realized that I was feeling myself a little bit. I went for a walk. I was actually on the phone with Rodney. And I'm walking around, and I had on some sweats and my shirt, like my short sleeve shirt I got on. And then
right.
The sun's shining on me. And I'm looking around, and, people out here, they swear it's cold right now. It's like 50s. That's, it's frigid. And so I'm walking around. I'm looking at people with jackets on. I saw a couple people with scarves. I'm not joking. And the sun was out shining on me. And I'm like, wait, what's going on? And then I was like, oh, this isn't normal for y'all. I'm hyped because I'm it's 20 to 30 degrees warmer than what I'm used to this time of year. But they're this is crazy. I can't handle this.
Y'all out there.
Yeah, it's been interesting.
Like a music video. The music videos, one person got a jacket on, the other person got a jersey on. What is the weather?
Something's not adding up there. Yeah, what's happening?
Right. But now
I love it.
But I wanted before we jump in this, I just want to say thank you for being a good friend and a good resource in the real estate game. I've known Mark for probably 5 years now, 4 or 5 years going on, it feel like. And Mark was one of the first people that gave me a chance with mortgages in the beginning when I was a new agent. And Mark was a person that put me on with getting my hard money loans. So, Mark put me in a position.
Yeah, man. Sorry.
Right.
It's so funny.
You put me in
You put your head down and look up, right? It's been, we met originally 5, 6 years ago.
Probably, yeah.
I'm aging myself a little bit. That's crazy. Yeah, man. Listen, it's been a wild ride, man. I'm a little bit nervous because I'm seeing some of the things that people are doing right now in the market, and they're getting a little wild and crazy, kids. But this is a lovely time to be in the mortgage business or in the real estate business, for sure.
For sure. But so let's start with the first part. Your video you posted today about the market. Do you feel like the market is going to go back to a recession, as people call it?
So I'm not going to speak on things that I don't know. I'm going to speak on things that I know, right? So I don't know what real estate looks like during a recession because when the market dropped before, I was doing something completely different. I didn't know nothing about real estate. I wish to God I had because I'd be a very rich man by now, but we're working on it. So one of the things that I'm seeing that's just alarming for me to see, because as I do work with investors. I have a small commercial mortgage brokerage in Philly. We get people funding to do flips and rehab so they can rent out properties and all that stuff. But then my primary loan business is retail buyers, people that are buying houses to live in, or maybe even buying investment properties, but they're getting conventional financing to do so. So when I'm seeing people paying the most that they ever have for for homes, and I had a guy call me yesterday. This is a wild conversation, by the way. He was referred by an agent that I know who was like, "Oh, you need to get funding for an investment project? Yeah, call Mark." Now, I don't even really handle those loans. I send them over to Genova. But I was like, I'll have somebody talk to you if it's a deal. But, I got a couple minutes. Tell me the numbers. And so he starts running off the numbers. And I was like, 75 or $72,000 purchase, $55,000 rehab, 127 all in. What's the ARV? 205. Huh? Oh, no, I'm sorry, not 205. That's bad math. 155.
Right.
I'm
So
sorry.
right.
155. And so I was like, huh? And I'm like, you realize like your gross profit on this deal is like less than 25%. Your gross profit. And he was like, okay. And I was like, this isn't really a good deal. How much cash do you have? And he goes, oh, well, I got enough for 10%. I'm like, 10%? You can't put 10% down on an investment property that's move-in ready if you're getting financing, right? Like you're looking at 15% if it's a conventional loan, single family. You're looking at 20% if it's, you're getting most of the time with most commercial funders or banks that do small balance loans like a PFCU and that ilk, you're looking at minimum 20% down. If you're getting a multi-unit property, you're looking at minimum 25% down for a conventional loan. So I'm like, you only have 10%. You're buying a property that you're telling me needs $55,000 worth of work. I'm like, well, how much cash do you have? And he's like, well, why does that matter? I'm like, well, because you need to have some cash in the deal because you're borrowing other people's money, but they're not going to take on all the financial risk.
Right.
And he goes, I don't really see how that matters, but like I have access to some cash. I was hoping to use your cash. And I was like, that's how loans work, but you still have to have some skin in the game, right? So when you start hearing stuff like that, that's like ding, 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 ding. Like people are getting into real estate investing that don't have any business in real estate investing. And that's not to say that it's not for everybody, because I think that one of the things that's beautiful that's come out of this wave that we're seeing, that you're a part of, I'm trying to be a part of more and more every day. And we have friends in the city and in the greater, real estate community that are making information accessible to people that traditionally this hasn't been something they knew about, right? If somebody would have told me about this stuff when I was in my early 20s, I'd be a very rich man by now, because I was always a worker. I was always about that action. I just didn't know, right? I didn't know that you could get a house with a 3.5% down payment and have tenants paying part of your rent. I didn't know that you could house hack. I didn't know that about that. I was gladly paying rent because I was like, what's better than what we got here? I don't have a lot of money. I can't afford a house. Right. Well, actually, you, brother, some of them bottles you was popping, maybe not do that. So that's one of the things that, like, I don't want people to take from any of these conversations we have when we say, hey, be careful. It's just be smart, right? If you're investing in real estate, just like if you're investing in anything, you have to understand that there's inherent risk that comes with that. If you're investing, that's money that you have to invest. It can't be all of your money in life. Right. If it doesn't work out, you need to still be able to eat tomorrow. You got to be able to buy your kids, groceries and clothes for school. Well, for homeschool. Right.
It shouldn't be your end all be all. Like, you bet your last on this one situation.
Right. And that's one of the things that I'm seeing that makes me nervous. I'm also seeing, even with retail buyers, people are buying houses just because they feel like they have to buy a house. Like, this is what you got to do. Everybody's buying a house. If I'm not buying a house, I'm a loser. Take it easy, man. I do mortgages for a living. That's how I feed myself. I just bought my first house last October. Could I have afforded a house before then? Absolutely. Was I really pressed to do it? Not really. And honestly, the house that I bought, I only did it because it made sense, and I was going in, and it was a project that, my buddy's rehabbing the house. Is going to be worth more, yada, yada, yada. It makes sense. Before that, I did a flip with some other partners. I'm 37. It's people that's like, in their early 30s, in their 20s. They're like, I got to buy a house. There's nothing wrong with that. But make sure that you're ready for that smoke, because if you're buying a house because you're pulling together your last, like you said, just to get it, and then you're not really financially stable because it took everything in your life to pull together, and you had to get a gift from your mom and pull in a favor from your homie. Oh, yeah, remember that money you owe me? Well, now, if you have everything on the line and you have a loss of income like a lot of people had less than a year ago because of COVID,
right,
happens now. That mortgage payment still got to get made. So I feel like a lot of people need to do a better job, too, of having a budget in their lives. So all of those factors, the fact that you have a lot of first-time investors coming into the market that are grabbing up inventory, you have a lot of first-time buyers coming into the market because the cost of money is really low. There's a lot of activity right now in real estate, and it's gobbling up inventory. Plus the people that were already going to buy a house this year or next year or last year or whatever, right? You always have a certain amount of people that they were like, hey, based on my plans, this is when I was going to buy a house.
Right, 2020 a year.
Yeah, 2, 3, 4, right? So then you're seeing all this go on with the retail inventory. Well, the reality is there's people that are buying houses right now that they weren't home buyers a year ago. They weren't home buyers 2 years ago. The cost of money was more expensive, right? They didn't feel that pressure on them that they had to get a house even.
Right.
So they were okay. At some point, interest rates can't stay low forever. This is lovely. I love doing lots of loans. It's been very profitable for me in the business. My business is growing and expanding. You're selling more houses. Everybody's happy. But this isn't a feasible way for us to have expectations of what's going to happen in the future. And so one of the things that go ahead.
No, go ahead. Finish your thought.
One of the things that I try to do is, pay attention to what people that are smarter than me are saying. There was this book I read a few years ago. I think I might have sent this book to you a couple years ago even. And it was called the upcoming crash of 2017 to 2019. That was the name of the book, right? The guy who wrote, I think I might have just posted that not too long ago in the group. You're right. Yep. And the guy who wrote the book is an economist. He's a Harvard trained economist, Harry S. Dent. Now, I'm not saying that this guy's the expert on all things in, financial, but his theory was sound. He goes, there's a cyclical nature to our economy, right? There's people that were all born around the same time, and the people that were born around the same time all, kind of entered the workforce around the same time, and they had kids around the same time, and they are making money and their income's growing around the same time. Their kids are moving out of the house and they don't have that expense all around the same time. And then they're selling their house and spending less money because their income's now declining around the same time, right? He calls it the spending wave cycle, right? So, we're peers. I think I'm a little bit older than you. Definitely in my hairline. But we're around the same age. But you have children. I don't have any children yet. I have godsons. That your kids and my one godson, they're right around the same age. So right. if we're talking about hey, what's the spending right now? We're making money, but we're also spending money. It's going out, right? Hey, baby need food. You need diapers, right? We need this. We need that. So you're spending a lot of money, but you're also making a lot of money right now. There's going to be a time in the future where you're not going to need to spend as much money because your kids are going to be like, Dad, I got it. You know what I mean? Remember them properties you set me up for? I flipped that and flipped that and flipped that, and I have my other business, or I got my career. I'm rocking and rolling. I don't need you to support me. So then your spending is going to decrease. Well, when your spending decreases, that's less money entering the economy. The velocity of the dollar is how a lot of American economy works right now, right? That's why a lot of people's business faltered when they said, hey, everybody stay at home, you can't go nowhere. Because people were like, all right, well, I can't go nowhere. What am I going to spend money on?
Right.
There were people whose businesses were based on that. Their businesses failed. The businesses that were supported by their businesses failed. The businesses that were supported by their businesses failed. And so that hurt our economy, right? We haven't really seen the repercussions of that. This is separate of the spending wave. This is just the realities of life, right? So there's a group of people whose earning power and their income and their spending has been supporting our economy for a long time. Those people are aging out of their spending time. So right. The economy's got to slow down. That was technically supposed to happen about 2-3 years ago. That slowdown was supposed to come. The U.S. economy, the policymakers, they've been doing things to like artificially,
stimulate,
keep it going. It's to stimulate it, right? Quantitative easing, all these things that are way above my pay grade. Well, what I'm seeing in the mortgage business is, in addition to that, what happened last COVID hit, and people were losing their jobs and businesses were shutting down.
Right.
They said, they came out. Yeah, you don't have to pay your mortgage. Well, there's companies that are waiting on those checks. The people that own the note, they're waiting on those checks.
Right.
They can't not get paid forever.
Right.
The people that aren't paying rent and they haven't had to in Philly right now. The people that are waiting on those rent checks, they have bills to pay. So there's going to be, even if you take away the fact that we're overdue for a correction in the market, just look at the immediate things that we're seeing in the economy. I've had people that I pulled their credit to get them approved for a loan, and they haven't been paying their mortgage because they didn't have to. And I'm like, hey, well, it looks like you haven't been paying your mortgage and you're applying for another loan. Like, why were you paying your mortgage? And they're like, oh, they said I didn't have to. I was like, but you didn't have any loss of income. You've been working this whole time. They're like, yeah, I know. So just think about that. That's the people that been making money. They're coming to me to get another loan. So think about how many people that they never even get to me because they don't have that income coming in, or their income's dropped off, they're underemployed, they're having to get hustle gigs or whatever to figure it out because their primary business or their primary job went away. At some point, that's got to catch up to us. And so when
move back, Mark. I don't know what you did. You there?
Can you hear? Yeah. Can you see me?
I hear you. The visual kind of went crazy.
That's weird. I can see you and I can see my face. I don't know what's happening.
All right. Well, as long as the people say they can see you, can y'all see?
Yeah, I don't know. That's crazy. Can y'all see me? Can y'all see me?
All right.
Blurry.
Yeah,
that's weird.
Blurry, but you can hear Mark, right? Long as y'all can hear him. Can you hear him?
Is it better?
That's better, Mark. Yeah, right there. You're good.
Okay,
right there.
All right, sorry about that. So, that's gotta catch up to us. Like, at some point, the government's going to stop saying, "Hey, you don't have to pay your mortgage." They're gonna be like, "You actually got to pay your mortgage now." Then we're gonna see who was just stacking money because they could, and who actually didn't have it. And the people who didn't have it, the mortgage companies and the banks are gonna be like, "Hey, well, if you don't have it, then we have your property. Let me get that." Now, depending on where you live, the foreclosure process, yada, 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 that might not be a quick thing. This may not happen for like a year or two, but at some point, it's going to be a lot of people's properties that are not their properties anymore because they're going to say, hey, you're not giving us the money. We need that back. In addition to the greater effects in the economy, just in general, there's a large percentage of our population is not, they don't need to have, the 4 or 5 bedroom house anymore. Their kids are older. They moved out. I talked to a real estate attorney today, and he said he had a client that was out in the county in Abington, and they had a house that had been in foreclosure for a few years, and they were trying to see if they could refinance it. And I was like, well, they're in foreclosure right now? And he was like, yeah. I was like, well, who's going to give somebody a loan that's in foreclosure? Like, you already proved that you couldn't pay your bills. Like, they don't want to run it back. And he was like, yeah, I figured it's a crazy scenario, but I thought if anybody would know, you would know. And so I made a call to one of my funders, actually, that's based in Southern California. And I was like, hey, I know y'all do some wild stuff. What could you do? And he said, well, what we could do is not right now, but maybe after they make the payments for a while, after they get out of that foreclosure situation, we could maybe refinance them like a year or two from now. He's like, but in the meantime, they got to get that figured out. Like maybe they should get a hard money loan. I got a hard money lender to do it. Now you've done hard money loans before.
Right.
Is that something that you would want to take out of your primary residence?
No.
H to the ELL, no, right?
Right.
Like that's not something, you know, for those of you who don't know, a hard money loan means that the reason why we call it that, it sounds violent, is because the interest rates are higher than what you would typically borrow money at if you were buying a property, getting conventional financing or government financing like an FHA or VA or Fannie Mae or Freddie Mac loan. And it's interest-only payments. It's meant to be used for a short period of time. Typically, investors will leverage this so that they can buy a property, run through it really quickly, fix it up, and then sell it to somebody, or fix it up, get a tenant in there, and then go to the bank and refinance it. Well, he was talking about them doing this for the house that they live in that's worth $800,000 that they owe $700,000 on.
Yeah, they was trying to set them up for a disaster.
Right. But think about how many people that's going to be them in a year or two or three, because
They let
like their income, at some point their income was higher than it was now. That's why they were able to afford all these things. There was a reason why they weren't making their payments. Most people, if they have it coming in, they don't just say, hey, I'm gonna just not pay the mortgage for the house where I live. Like that's not a good idea. Everybody knows that, right? Not only is that going to negatively affect your credit, that means at some point the people who gave you the money to buy that house, they're going to say, hey, you haven't been paying us. We got to take that property so that we could sell it so we could get our money back.
Right. So
that's going to happen, man. It's going to be rough for a lot of people.
So we're saying overall the market is strong. However, there be an adjustment for those who did not do what they were supposed to do during this time period. Because
Anthony, like some people were legitimately affected. Like when COVID first happened in Philly, you were working on a rehab project. What happened to your project?
It got shut down.
Right. I like how you did that. So your project, it got shut down. Were there other people that do what you do, whose projects got shut down?
Yeah, we all got shut down. So, I mean,
right.
I tell people my transparency, like when COVID first hit, I just was coming off my wet. And so, like, I didn't have any reserved. I was pop starting back over with life.
Right.
Life.
But you also have a real estate license. You have some rentals, right? You have other sources of income. And even though at first it was weird because people weren't shopping for houses, last summer was the busiest summer we've ever had. So
last year we did exceptional for it to be COVID, and like you said, for people to be impacted with jobs. We sold over 40 houses last year.
Right, but that's not everybody's life. A lot of people, they legitimately had a financial interruption.
Right.
What if you were the contractor that was waiting on that check to do that rehab?
No, prime example, my contractors, we woke up like, yeah, we gonna do what we doing Friday. I'll be able to get funded. I couldn't get funded that Friday because we technically were shut down and we weren't done the work. So I had to front the money out my own pocket to get them to do what they could do, just to go back to the lender and say, yo, I'm done this. I need that money still. Because the lender for sure wanted that payment on the first of the next month, regardless of COVID. Because he had to make a payment to where he got the money from. But
exactly.
But one thing I will, and we'll swing it back. But one thing I will say, COVID for all of us, I feel like it showed us whether you do real estate, whether you got a second gig, or even if you just got two incomes in your household, like a spouse, a study buddy, whatever your situation is, you know that you can't rely just on that one income. I don't even care if you're a person that say, yo, I'm not an entrepreneur. That's fine. Entrepreneurship isn't for everybody. However, you could be making money investing in stocks. You could be making money. Driving Uber and Lyft right now. But you got to have something else in your rotation because COVID showed us we're all disposable at that point. We're all disposable.
Right. And that's the biggest thing for people is like, hey, know that, at any point, if you only have one income stream and something completely unexpected happens that wipe away your income stream or can seriously interrupt it, it could get real bad real fast. And so that's the one thing that, like, when we say, is there going to be a crash, there's going to be a crash, nobody can pinpoint exactly when the market's going to, drop and start bottoming out. I wish I could, but you got to stay ready so you don't have to get ready. You don't want to be figuring it out when you're in the middle of your rehab project and you have all of your funds extended. And then the market drops and you thought you were going to sell this house, but now there's a lot of inventory on the market and there's people that got nicer houses than you, and the comps ain't there to support your value anymore. And now you can't get the number that you thought you were going to get. And now you got a smaller check coming and you're butt naked. Or there's people that are in the same neighborhood as you, that they got houses that they thought they were going to sell, and now the comps are there, but maybe they have deeper pockets, and so they say, oh, it's cool, I'll just rent the property out until it makes sense to sell it. Well, you got rentals on that same block or in that same neighborhood, and your rental is a rental grade rehab, and their rental was a property that they were planning on selling to a buyer at a certain price point, so they got all the finishes. Right. And they said, hey, we don't want to have to worry about whether or not this is going to get rented out. What is this guy down the street renting his place for? Yeah, let's rent ours for that. So now your tenant is their tenant. now what do you do?
The trickle down effect.
Exactly. So now you got to drop your rents down to match. You got to drop your rents down just so you could keep a tenant, because you got to go after a different tenant than the person that was paying what you were charging, because this person got a nicer house than you. So guess what? They just took your tenant.
So hold on, Mark. Let's bring it in, right, for the people that are like the basic beginners, right? So okay. I know a lot of people, like, we said a lot in regards to the economy and not having to get ready, but just being ready. And in that being ready part, like, one of the things I recommend, like, people always told me, but it wasn't until COVID I needed to really do this. Have 3 months of your mortgage payment or your rent payment set aside. Have your car, all them accounts you got, literally at least have one payment in advance. Everybody's not in a position where you can save 2, 3, 6 months in advance of your total expenses. But make small strides and just save the little things that are necessities. Mortgage, child care, food, utilities, like car note, insurance. Like, have those top 5, 6 essentials. And just let's set the goal this year. I'm going to have 1 to 2 months reserved just on those things. 1 to 2 months. Then after you get those reserves, then call me and Mark to talk about real estate investing and buying big fancy houses and cars. But with that said, though, Mark, let's just talk about how to prepare to get pre-approved for a mortgage, because, I get hit in my DM every other day with, I'm working on my credit, or, or I heard, my favorite one, I heard cousin Pete, somebody that bought houses 10, 15 years ago, like, that's not this market. So it's like, what can people do to be prepared to purchase a house across the board? Like, if I said to you, hey, I want to buy my first house this year, and at the end of the year, I want to buy an investment property, where can you tell me to be in position as far as credit and things needed to be eligible for the best loan products?
Well, one of the things that, you said that really stuck out to me, because I heard this a long time ago, but I'm hard-headed. I didn't take the advice all the way. And I had to get sucker punched before it really hit, right? When I was a young idiot, I learned early on, have a they call it an emergency fund, right? What's your emergency fund? Before you start investing, before you start buying properties and doing all this, do you have an emergency fund that no matter what, like you said, you got 3 months? The good measure that I've heard that I think is a good one is 6 months of reserves. Like, I have 6 months of my expenses liquid in a rainy day fund that, maybe it's a checking account or a savings account that I can't easily touch. And I know that if I have to get at it, because it's break glass in case of emergency. I had that ready to go. When I was in my early 20s, I had some credit card debt. I was making decent money at that time, I thought.
Letting the good times roll.
Right. I was living it. And then I switched jobs. And when I switched jobs, my income didn't immediately keep it. Probably I had a drop in income, actually. And then I realized, like, oh, this is what it means to be overextended. So when people have bad credit or have some issues on their credit, I'm never one to judge because I was that bull. You know, I had the people calling me up saying, hey, we're going to come get your car. And I was like, well, good luck finding it. You don't even know where I'm at. You know, I was him. I was he. And so I messed up credit. That's how I learned how to, you know, be responsible. I messed it up. I didn't have cash. I was out here in the world. And then after that, I got in the habit of only spending money that I had. So even when it came to using a credit card, when I got my credit card back, I just closed this credit card last year because they wouldn't up my limit. Capital One's petty. Then they sent me an offer 3 months later to get the credit card back. I don't want to talk about it. But I had a secure credit card with Capital One that you had to give them the money up front. They give you the money on credit, right? They're not doing this out of kindness of their heart. They're charging me a fee, and they're lending me my own money.
Right.
But that's how I got into it, right? And then I learned to only spend money I have. That's how people should be using credit cards, right? You're not supposed to really be using credit cards to pay for stuff that you can't afford. And you say, oh, I'm going to figure out later.
Oh, I hope I could pay it back.
I hope I can pay it back, yeah, at some point in the future. It's like, hey, I could buy this cash. I have the money in my bank account, but I'm going to get these points or, you know, bang, 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 right? So that's a different way to think. And unfortunately, some people, they just weren't raised with that thinking. I wasn't raised with that thinking. I was raised, hey, if you can't afford it, you can put it on a credit card.
No, credit cards are bad. We just can't have it. That was the thing.
Yeah, I was like, hey, you don't got it? Charge it to the game, right? That's how I learned.
That was what we learned once we went to college, and they just was giving us cards to walk across.
They're like, hey, you don't gotta have the money, just put it on the card. Oh, word? Okay.
But Mark, so like on average though, like what credit score do you feel like is a strong score to get you into home ownership? And if you wanted to pivot quickly into investment, where should I be starting as a threshold?
So there's different numbers, right? Let's throw around some numbers. If you guys are able to take notes, this is when you definitely want to take notes. The minimum credit scores that you need to have to qualify for certain loan programs. If you're buying a house to live in, technically a 580 credit score with no active collections or active disputes. I repeat, a 580 credit score with no active collections or active disputes. That means that you don't currently owe people money that you're not paying them back, and you don't have people that you owe money that you're not paying them back that you're disputing it on your credit. Because if you have a 580 and you got disputes or collections, you don't really have a 580. Your score is probably really lower than that, because once those disputes get removed or once those collections get resolved, your score may actually drop. And we can talk about how your score is not really what it is. That's a whole nother conversation, right? But that's the technical minimum credit score for you to get an FHA loan with a 3.5% down payment. Now, what I'm seeing for people who are actually getting approved for loans with me, because interest rates are low right now, the government is tightening the lending criteria for FHA loans and VA loans. So whereas a year and a half, 2 years ago, that 583 credit score, if you had good savings and you were making enough money to support the mortgage payment, you were good to go. Those loan scenarios are getting turned down more and more because the government's not stupid. They set the loan policy for America, right? They know that interest rates are low right now. They know that people have more buying power right now than they ever have because interest rates are low. So if I could buy a $250,000 house this year based on my income and the debts that show up on my credit, but a year and a half, 2 years ago, I could only buy a $200,000 house, is it fair to say that a $250,000 house might have higher expenses to maintain? Yes. Is it fair to say that a $250,000 house might be more expensive to insure and to upkeep? Yes. Right? So now they're saying, hey, if somebody's got lower credit, their debt to income ratio is higher because as a percentage of their income, their debts that show up on their credit report are higher, a higher percentage. That's going to be somebody that if they have a loss of income, like a lot of people had last year, they're going to be the first person to default. Yeah, we're not doing the loan for them. So those loan scenarios aren't even getting approved. You know, when we as a mortgage company, you know, I have my license with a mortgage company. There's also banks that do mortgages. But my company, that's all we do. We just do loans. You can't come here and open up a checking account. You get these loans. So if you're going to a mortgage company or a mortgage bank and you're saying, hey, I want to get a loan, we don't really make the rules for the loans. The loan rules are made by FHA or by HUD if you're getting an FHA loan. They're made by Fannie Mae or Freddie Mac if you're getting a conventional loan. They have a set of rules. Those rules are in a computer program. If you apply for a loan with me, I take all of your information, your credit score, the things that are showing up on your credit, the liabilities, your income that you say you make, how much money you say you have in the bank. We punch all that stuff into the computer program. We push the button, it submits the loan scenario, and then it comes back with a thumbs up or a thumbs down. If it's a thumbs up, you can get the loan. Then we can send it to our underwriter to review it and everything else, right? If it's a thumbs down, that means you can't get the loan. We're getting a lot more thumbs down for people that have those lower credit scores. So even though technically you can have a 580 with a minimum 3.5%, I would tell people, especially if you only are going by your consumer credit score, which isn't always going to be the same as when a lender checks your credit, to aim for like a 600, 620 minimum with, again, no collections, no disputes. If you're there and you know that you're paying your bills on time and you know that you have enough income coming in to support your expenses, plus you can support your new mortgage payment because you budgeted for it, then you should be in a good place. For conventional loans, the criteria is already higher. You already got to have a 620 just to get in the game. But again, when we talk about the sweet spot, if you're trying to apply for a conventional loan, especially as a first-time buyer, depending on your income, there's some programs where you can do a very low down payment, like as low as 3%, but the sweet spot for your credit is really like a 680 credit score or higher. You can get away with it with a lower than 680, but you're not going to be able to reap the full benefits. So,
Mark,
if you have a situation where you're going to be homeless in the next 2 months because your lease is up and you got your money saved and your credit score is not where you want it to be, but you know that you pay all your bills on time and you don't have any active disputes or collections, and you got the money for your down payment and closing costs, right now, I'd say have 8 to 10%, 8 to 10% of the sales price. That's going to be enough to cover your down payment plus your closing costs, because we already know in this seller's market, what happens to people that are saying, hey, I need seller assist? Piece of hair grease. You're not getting your offer even entertained, because the seller's looking at your offer as weaker than the next person who says, I got all my money ready to go. So if you got your 8 to 10%, you know your bills are paid on time, you know you budgeted for this, and you're going to be in a situation where you either got to renew your lease or move somewhere else or stay with some people you don't want to stay with, then hey, maybe we should have a conversation about what your loan options are. But if you're still working on those things, it's okay. I'm going to still do your loan a year from now. Anthony will still help you buy a house a year from now. I promise. Listen, the kids said, Dad, they said, Dad, we need these checks next year too, right? So we're still be able to help you. You might want to have a conversation with a loan officer or a real estate professional to find out what you could tweak, or if you have a solid plan. But don't feel pressure like, if I don't buy a house in 2021 and I didn't buy a house in 2020, I'm a failure. It's not that serious. There's still going to be people selling houses next year, and there's still going to be people giving you loans, and there's still going to be agents helping you buy houses. I promise.
So Mark, right, where I want to jump in at is, I love what you said about the 8 to 10%. So I'm saying 8 to 10%. In that 8 to 10%, I'm saying take a piece of that and make that emergency fund we just challenged all our people to have. So we want part of that to be an emergency fund. If you know you want to spend $200,000, I want you to take a portion of that for the emergency fund. The rest of it goes towards the house. If you're looking at a $200,000 house, I don't want you to look at $200,000 houses because of the market and the seller's market, no seller assist. I want you to look between 180 and 190. Because if you end up having to compete and go above, you're not at your ceiling. You don't want to walk in at 200 and 200 your ceiling. Let's start 180, 190, and you got room. But in addition to that, like Mark just said, your income is one way today, but 4 years from now, 5 years from now, your income could change. Hopefully it goes up, but what if it goes down? So again, as a good buyer, you don't need to buy at the top of your ceiling now. Let's get you what you need versus what you want so that you can live a comfortable lifestyle. You don't have to please or impress anybody. Let's just live a comfortable lifestyle because, like Mark knows, most people that say they're doing it, they're not really doing it. There's few and far in between the people that are really out here doing it. And the ones that are doing it, you don't really know that they're doing it. So, I mean, again, where you said a 680 credit score is going to be top tier to get you bells and whistles.
Well, I wouldn't say even top tier. Like 680, I just keep it 100. Like, I didn't know this before I got into the mortgage business. If you don't have a 680 credit score, you can't even get all the loan options that are available to you. Like, that's honestly, from a mortgage company standpoint, from a mortgage bank standpoint, there's loans that you can't even qualify for if you don't have a 700 credit score, frankly. But let's just say 680, realistically, if you have a 680 credit score, we look at all three of your scores when you're applying for a loan. We take the middle score. So we throw out the low score, we throw out the high score, we take the middle score to qualify you. If you have a 680, that's like the minimum we're looking for to even give you all of the loan options that are available. You start getting penalized if your score is below a 680 for most loan programs that Fannie Mae and Freddie Mac offer. Like, they have adjustments.
Right.
But so you have a less than a 680, the rate, the price went up. It's right, going to be more expensive.
But that's what I'm saying, where you said, hey, there's no pressure, there's no rush. You don't have to buy tomorrow. I want you to buy.
It's okay.
But what I am saying to you is, look, there's so much information and free resources, or not even free, but investments you can make to make sure that you have a 680 or above credit score. Because again, we want you to be able to continue to buy. Hopefully this first house isn't your last house. So you get that 680, because you got that new mortgage, eventually your score is going to go up. So from 680, you go to a 700, plus you got reserves. So now when you're ready to go buy that investment property now, in year 2 or 3, you're not starting from ground zero. You already got money in the kitty. You're just adding more money to the kitty. So now if you see how, if you take that time in the beginning and set your foundation up, like you said, we've been getting told this for a long time, but we're not taking heed to it. So again, get your notepad, write your goals down, figure out where you are financially, get your credit score, Credit Karma, Experian, get those reports. They're not accurate scores, but they'll at least give you a barrier in the ballpark. And then again, what do? Write down where you are today, and let's figure out a plan to get you where you need to be.
I just posted a link in the chat. If y'all could take a screenshot and look that article up. There's an article that I send to all of my clients when they ask me about, the credit scores that they have access to. Credit Karma, I personally use. Like, I have Credit Karma app on my phone. I get the emails every day or every week or whatever, and they tell me what's going on. Do I believe the scores? No. But do I pay attention to the habits? Yes. If Credit Karma says my credit utilization is high, my credit utilization is high. If Credit Karma says I open up a new account, there's a new account that's been opened on my credit. If Credit Karma says my payment was late, my payment was late, right? So you use Credit Karma and those types of resources for what they are, credit monitoring. The actual score that we use as a lender when you're applying for a loan, the formula that we use to calculate your score is always going to be a little bit different than the formula you have access to as a consumer. I'm going to tell you why. There's companies that this is all they do. They go to the credit bureaus, TransUnion, Equifax, and Experian, and they take the information that's in their database, because that's all the bureaus are, they're like a database of information, right? Mm-hmm. They take that database and they translate that into a report for you. So all of the information that's in their database is attached to your social security number, your date of birth, and your name. They compile that into a report. The report that you get when you apply for a loan, it's not actually from the credit bureaus. It's from a third-party company called a credit vendor. They're a credit reporting agency. Like a credit, what do you call it? Equifax, Experian, and TransUnion are credit reporting agencies. But the actual report is from a credit vendor. They compile all your information, and literally it's a report that we get into like a PDF. And it has your scores in there. It has a history of all of your accounts for the last 7 years, whether or not you pay your bills on time, whether or not your balances are low or high compared to the credit that's been extended to you, right? That number is a numerical representation of the risk associated with lending you money. So if you have a good track record of borrowing money, that number is going to be high because that means that you have lower risk. It's a good chance that you're going to pay that money back. If that number is low, that means you have a track record of not paying money back on time, or you're not using your credit responsibly because every time you get credit extended to you, you max it out or you carry high balances, right? So you want to pay attention to the habits. If my credit utilization is consistently high on my credit cards, I got to think to myself, is that because I just like to live life on the edge and I wait until the last possible minute to pay off my balances? Or is that because I'm buying stuff that I can't really afford and I keep a running tab on my credit cards? At what point do I want to maybe work on those habits? This it's fair to say that for most working people, like you said, as you're going through, working for a living, like I've been working for a living for a while now, for like 20 years, right? You've been working for a living for a while now. You got mouths to feed. So as we're working, there's times where you made less money than you do now. There's times when you maybe made more money than you do now. But most people, the longer you're working until a certain age, you make more and more money. What also happens as you make more and more money, Anthony? What do you notice?
Start getting more and more things. Now I'm turning.
You expensive. You start getting expensive.
I like gadgets now, right? Things things I don't even need, but I like it.
You find ways to spend it, right? So a lot of what people aren't taught in school, and this is something that I never learned in school, is when your income increases, you don't increase your expenses automatically. You increase investing first, increase your savings first, making sure you have a financial cushion in life so that if you were to have an interruption in your income, you could still cover your expenses, but then also buy income. If you're buying your first house, instead of getting the most house that you can afford, maybe get the most house that you can afford that has 2, 3, or 4 units. So now that you have a mortgage payment due, every month when that payment's due, you're not 100% responsible for that payment. You have tenants that they need a place to live. They want to be in the neighborhood. They're paying you rent. You use those rents to pay your mortgage. It may not cover your whole note, but if it's covering a portion of your mortgage, now you're able to save more aggressively. Now you can have a bigger nest egg to have that cushion more comfortably. You have more money that you can invest, whatever you want to invest in, whether it's real estate, stocks, your friend's new business, whatever it may be, right? But it's a different mindset when you say, hey, whatever I make, I know that I have a certain amount of expenses. I have those expenses covered by my income, but then there's a gap. With that gap, I'm going to invest a certain amount. I'm going to save a certain amount for short-term emergency spending. And then whatever's left over, that's what I spend on stuff I want to do or on gadgets.
Don't forget my gadgets.
Yo, listen, I need the gadgets too. I got a gadget. Actually, you reminded me of that. I got a gadget I spent $150 on, and it's been sitting in a box since I bought it on the floor underneath my desk.
I used it twice.
Listen, I don't want to talk about it. You just made me emotional about it, right? But it's one of those things that, when you hear it, you're like, oh, hey, that makes sense. But, I got stuff that I got to get. Well, do you really need to get it? Was there a point when you made less than you'd make now and you were still able to function in life? If you were taking people out on dates, you were still able to take them out on dates. If you was going out to dinner,
you didn't have to go to Steak 48 every time you went out.
Right, exactly. And so you probably could live off of less than what you're living off of now. I know I can. I spend a lot of money now.
COVID showed us we did with a lot less because no sports events, no movies, no all these networking events. Look, right. I'm doing just as much business I was doing without the network.
Right. Exactly. I haven't been to Anthony. It's January 2021. The last time I went to a closing, I think was April, maybe May of 2020.
And everybody's still happy with your service.
And I've actually been doing more business than ever. Look at God. So it's one of those things where we can always be a little bit tighter, and it's a common denominator. Like I deal with people all over the spectrum. I've worked with first-time buyers who are hourly employees, and they're using everything under the sun to make their house, possible for them, right? I've also worked with people whose income is in excess of $500,000 a year, and I'm helping them buy a property, right? So there's a common denominator that I see for people who have high credit scores, they're able to invest and buy multiple properties, right? It's not always about their income, it's their habits. The people that have good habits, they're consistently able to add more in. Because I've talked to people who had over $200,000 a year in household income, and they had less money in the bank and a lower net worth than people who had $50,000 a year in income. So it's not always about your income, it's about your habits. Do you have good habits? Do you have habits where you live off of less than what you make, you invest your money and save it first, and then you spend what's left over? Or you have habits where you spend whatever you got, and then you're like, oh, I had an extra $100. I'm going to put that in my savings account.
Habits and discipline, y'all. Habits, discipline, and applying pressure all 2021.
Yep.
I got another question for you.
Yes, sir.
We got a couple minutes left. For the people who own properties now and they're looking to refinance, how do we do it? A lot of people, I talk to so many people and they like, I don't know what you talk about when you can say I can refinance.
Well, like, first things first, we talked about it earlier, right? I've had some of these conversations. Pay your mortgage payment. Don't be not paying your mortgage payment and then turn around and say, hey, I want to get a new loan on this property that I already took a loan out on that I haven't been paying. That's a big red flag, right? So make sure you're paying your mortgage payments and paying your other bills on time. That's the number one thing, right? Because it's still based on your credit. There's certain refinances that you can qualify for just because of the type of loan that you have. Like if you have an FHA loan and you've been paying it on time, you may be eligible for a refinance. Now, if you just bought the house last year, it probably doesn't make sense. But if you bought the house 3 or 4 years ago and your interest rate is like above 3.5%, 4%, you might want to talk to somebody about refinancing, because you could be eligible to get a lower payment by dropping your interest rate, and that's it. Just that simple. You're like, hey, I've been paying my payments on time. I want to get a lower rate. I know rates are lower right now. Do I qualify for a lower interest rate? Yes, you do. Let's go. Also, for people who maybe you've noticed that if you've been sitting on your property for a few years or more, and you're seeing houses in your neighborhood that are selling, or people are coming in, buying houses, fixing them up and selling them, that's usually a sign that there's a lot of forced appreciation happening in your area, right? Forced appreciation means investors are coming in, buying the property for one price, they're doing work to it, and then now they're selling the property for a higher price.
Okay.
That generally means that property values are probably going up in that neighborhood because that's an area that people want to live in. They're adding value to the market, right? So your house may be worth more now than it was when you bought it. If you've been paying your mortgage down at the same time, you got the balance of your mortgage going down, the value of your house is going up, you have equity. The difference between that balance and what the house is worth is the equity that you have in your home. If you have enough equity, and let's say, for example, you got an FHA loan 4 or 5 years ago, you may be able to get rid of that mortgage insurance. So that monthly insurance payment that you make, not your homeowner's insurance, but the mortgage insurance, this is the insurance to protect the mortgage company in case you don't pay. You may be able to get rid of that if you can demonstrate that you have more than 20% equity in the property. Meaning you owe less than 80% of what the house is worth. That's what that means.
So what about the people who don't have mortgages? They own the house free and clear, and they just have no idea what to do about, like, how do they go about refinancing?
If you have income and you have a property that you've owned for an extended period of time and you don't have any debt or very little debt on it, and maybe you want to, think about buying another property in the next year or so, if you have income and we can prove that your income will support the debts that show up on your credit report, plus a new mortgage on the property that you already own, you may be able to pull cash out of that property that is real money to go in your bank account that you can now use as a down payment and leverage that to get another property that you could maybe rent out to a tenant, get a mortgage on that. The tenant's going to pay your mortgage. That balance is still going to go down over time, and that could be something that be extra income for you. One of the things that I realized early on is that I'm a worker. Not everybody's a worker. Some people don't like to work. Some people, they like to just live their best lives. I think it's fair to say you're a worker. Is that right, Anthony?
For sure.
Right. So some people, they do work that they love. They have a business that they love. They're going to work no matter what for the next 20, 30 years. until they decide they want to tap out, right?
Mm-hmm.
Even when they decide they want to tap out, they still might find a reason to work just because they like to be active.
Right.
So if you're going to work anyway, because a lot of people do, whether you need the money or not, you might as well have the option to work, right? Meaning you could work when you want to, not because you have to. So if I know I'm probably going to work for the next 20, 30 years anyway, because I'm a worker, and I could buy a property every year or every other year or every third year because I live off of less than what I make, I save a percentage of my income, and then I use it to buy a property. Now, if I took out a 15-year or 20-year mortgage, what happens in 20 years? I have a property that I own. The only overhead on that property is the taxes and the insurance.
Right.
And my tenants are still paying me rent every month. So I'm still getting income from it. And it's a piggy bank that I could cash out at if I need to in the future. That makes sense to me. That's why people buy real estate. So you want to be mindful of the fact that you don't have to be rich to get rich. And you don't have to make a lot of money to grow wealth. There's people that I've done loans for personally that they make less money than I do, and their savings put mine to shame. Their investing put mine to shame.
I just had a client. She just bought her first house. Mm-hmm. And when I tell you, she's a social worker. And I'm like, you're a social worker. Crib is nice. What she had 6 figures in savings for her.
And you started looking at your gadgets like, yeah, I don't need y'all no more, right?
No. And she said, my biggest thing was about her life was she was like, I never wanted to need or be in a jam. And she said, my biggest thing is, I help take care of certain people in my family. Right. So I know what my goals were, but I needed to have enough money for me and to help the people that I want to help. So, and her thing was, though, she thought her biggest thing was, her biggest thought was she thought she needed to do 20 to 30% down on a mortgage.
Yeah, that's common. So this is one of the trends that I'm seeing right now in the market because everybody's on Instagram. Everybody is on YouTube. There's so many gurus out here. They're saying if you're not a business owner or you don't own real estate, you're not investing, you a sucker, you losing in life, right? Everybody's feeling this pressure. So I have people that are reaching out to me on a daily basis. Mark, I'm ready to buy a house. I woke up this morning, I want to buy a house. I'm like, cool, how much money do you have in the bank? I got $2,000. Okay, how's your credit? Well, my credit's got some issues. Okay, so you want to buy a house, but you're not ready to buy a house. But you're not ready to buy a house. That's okay. I'm going to tell you what you need to do to get ready. If you do that and you run the play, we're going to get you ready. It might be 6 months. It might be a year. But don't you worry, brother. I'm going to hook you up, right? I have other people that I talk to. And it's funny that you say that the young lady, the client that you helped out was a young lady, because I'm seeing in general that women are a little bit more responsible than men.
Don't even go there, Mark, because that's a whole nother like.
It's interesting that you say that. Women generally don't feel the same pressure that men do to keep up with the Joneses. Generally, I've seen some women that too.
So in general, the male ego is a mother.
You out here in the world and have you doing some things you're not supposed to do. I've been guilty of it. I popped bottles when I didn't need it and I didn't have it. Look. You ever been out and and they're like, look, we're gonna do bottles, and I'm like, okay, let's do it. And then I got home and I was like, that was a bad idea. I don't know why.
No, it's a bad idea because you're like, yo, I got 2 cards in my pocket. I hope y'all don't go past 2 cards in my pocket. Because one of them I got this amount, the other one I got this amount.
Are you on the app on the side? You like, let me just yeah, that sounds like a good idea. Let me just check and see how much I got. Yeah, I'm in. Put me down. I'm in. Or you'd be like, hey, you got cash? Yeah. Give me your cash. I'm gonna put it on my card. Give me your cash. I'm gonna put it on my card, and then we'll just hook it up that way. You got to be careful about that. So in general, when I talk to young ladies, on average, they tend to be a little bit more on it when it comes to saving and just being a little bit smarter with their money. And so I've been having conversations lately with people that they're ready to go. They're like, savings is strong. They got their emergency fund. They got money in the bank. They got good income. They live off of less than what they make. They don't carry a lot of consumer debt. And they're like, yeah, I'm really nervous. I don't know if I can buy a house. I'm hoping that I can get approved. And I'm like, I'm looking at your credit report.
Seven, 760 credit score.
Right.
60 grand.
I'm like, let's see. You got a 768 credit score. You got $50,000 in the bank, and you make 5 times more than all of your debts combined, including the new mortgage that you're talking about getting. I think you'll be okay. And they're like, are you sure? And I'm like, yeah, I'm sure. No, I wish I had 20 more clients like you.
That shock you said, like, yo, like, oh, you got pre-approved? Like, why do you sound so...
Right. So and then those are the people that are like, wow, this is really happening fast. And I'm like, well, it's not really happening that fast if you think about the fact that you didn't get here by accident. These were habits that you had. Unless you transform into a different person who doesn't pay their bills on time, spends more money than what they make, is completely financially irresponsible, I think you'll be okay. You'll be good to go, whether it's now, a little bit from now, we'll be good. And they're like, okay, well, I guess that makes sense, Mark. So what you want to be mindful of is, you know, do you have the habits of this, the first person who's like, I gotta keep up with everybody else, I gotta do it to do it, or you like the second person that's like, man, I've been investing and saving my money so often that, you know, the idea of buying a house and having this big expense seems crazy to me. But then you look at it, you're like, oh, okay, I guess I am ready to go. Wow, Mark, this was a lot easier than I thought it was going to be. Wow, Mark, okay, I'm buying a house. Oh, this is happening. I'm under contract. They accepted my offer. Because one of the things that we both know, if you have a client that they're filling out their BFI, their buyer's financial information sheet, and they can show that they have strong savings, they have all the money that they need for the down payment and closing costs already in the bank, and they have good income, and they don't have a ton of debts. When the seller is evaluating it, when you're listing properties, are you looking at that offer a little bit more strongly? You're like, hey, you know what? I think we found a winner, right? So these are the things that we can do to prepare ourselves for the process, and it doesn't have to be 2021. If you're ready to buy a house in 2021 and you want to move, by all means, I want to make sure that we can make that happen for you. But if your goals are going to mean that you got to buy a house in 2022 or even 2023, I don't know. I had somebody I talked to a couple of days ago, and they said, hey, it sounds like I'm not ready to go. This might be a two-year long process for me. I was like, that's okay. I'll still be doing loans 2 years from now, and I'll be able to help you buy a house. Right. And they were like, okay. And just me saying that to them, it took that pressure off of them. Like, oh, okay. So that's okay? Yeah, it's okay. So don't beat yourself up. But at the same time, if you stay ready, you don't got to get ready.
So Mark, before they cut us off, right? One of my last questions for you. Self-employed. Can I get a loan if I'm self-employed? How do I get a loan if I'm self-employed?
Absolutely. If you're watching this either live or on the recording, I want you to go scroll my timeline. I have a whole video that I did on self-employed borrowers, but I'm going to give y'all a nugget-sized bit. If you're applying for a conventional loan or a government loan that's underwritten by HUD, FHA loan, right? You cannot use income to qualify for a home loan that you do not report on your taxes. I repeat, if you don't pay taxes on it to Uncle Sam, you cannot use that income to qualify. So you can't come to me and say, hey, Mark, I got a business that made $100,000 last year, and then I look at your tax returns and you pay taxes on $20,000. It doesn't work that way. The government wants you to pay taxes on the money that you make. Now, as a business owner, the tax code is designed to protect you. You are allowed to write off certain expenses. However, if you write off your expenses for your business and you claim a net income, that's the only income that I can really use for a 100% self-employed person to qualify them for a loan. Now, if you have W-2 income and you're also self-employed, depending on how long you've had that business and how long you've been at your job, I may be able to use both. But if you're 100% self-employed, you can't not file your taxes or not claim all your income or write off every expense under the sun and then pop up into a mortgage company or a bank and say, hey, I want to buy a house and my business made X, Y, Z. They're going to hurt your...
Go ahead. Finish the thought, Mark.
No, it's just that. They're going to hurt your feelings. That's the thought.
But like you said, that staying ready so you don't have to get ready part, even with self-employed, I feel like originally I was taught, dumb down my income so I don't have to pay Uncle Sam so I can get a refund. A refund's not really helping me in the long run. But what is helping me if I pay Uncle Sam, mind you, I got these reserves just to pay Uncle Sam, like I got these emergency funds. I'm not pressed about paying Uncle Sam at the end of the year because I'm paid that money. And I got these habits. Mark, keyword, Mark has been saying all night. Habits and discipline. So don't worry about not paying Uncle Sam because that money you're saving, just say at the end of the year you're able to just save, I don't know, $10,000 and because you didn't show Uncle Sam all your money. But that just almost cost you $100,000 in loan money. You're going to save way more money than that once you become a homeowner. So why cheat yourself? You're going to get a bigger tax credit, a legitimate tax credit because you're a homeowner. So don't cheat yourself. And it's the same thing when you want to go get hard money in business loans. They're looking at you like, you said you did this, you did that, you did this, and you don't show no income. You what's the word? You damn near borderline poverty and whatnot because you don't want to show no money. So now you know how that cycle turns into. You got to live at this girl's house. You got to live in this girl's house, or you got to be renting all these fancy places to keep up with your image. But in the end, you don't have nothing to show for it because you don't own anything. So I'm not saying anything wrong with it, but I'm just saying take the time to set yourself up to win. And it all starts with a process, but there's nothing wrong. And even for some people who fail, I tell y'all firsthand, I failed so many times. I failed to get me where I am today. I failed even I failed at flipping. One of my first early on rehabs, I lost 30 grand on that rehab. But now look at me. I recouped. I got myself together. Mark gave me another loan to do a deal, and I've been rolling ever since. Once you put me with that, But it's like,
but it's what is it? Lessons learned, changes made, right?
Say it again, Mark.
Lessons learned, changes made. Those mistakes that you made on that first project where you were like, oh, this didn't work out. We didn't say, hey, we're gonna run this back again and do all the same bad moves. So if you find yourself, because I had to have this conversation with myself some time ago, and I have this conversation with myself often because there's always things that I can improve on, right? But if you look at your situation in your life, whether it's financial, personal, professional, whatever it is, but let's just focus on financial because that's what we specialize in when it comes to the home buying process.
I feel like
if you look at like financial, what's that?
I feel like you want to take it somewhere. Finish this
thought. Absolutely.
Go ahead. All right, come on, because you always drop that game. So go ahead.
So if you find yourself somewhere financially that you don't like, there were habits that you had and decisions that you made that got you to that place. There was a time in my life where I was doing the most. I was spending money that I didn't have. I was overextending myself. I was just being an idiot. That's just that's the way I describe it. Now, I'm not saying you're an idiot if you made some bad mistakes too, but you have the habits of somebody who had idiot moves like myself, right? So if you're doing not smart money moves, stop doing that. Like the quickest way for you to fix something, I used to tell people this when I worked at the gyms, right? Once upon a time when I had a hairline, I used to manage health clubs and I was a certified trainer. I was an in shape dude, right?
You was the bull. Look, yeah, I train you, girl. I train you.
No. I always felt some type of way about those kind of guys. But what I would say is my job was this. If somebody came into the gym, they had a motivation that they woke up with that morning, right? They said, hey, I'm going to go check out the gym and see what's going on over there. And then they would come in and talk to me, and they would automatically start talking themselves out of why they couldn't do it. That's just human nature, right? When you go to not a grocery store, when you go to the department store, even though we can't do that as much anymore, when you go to Macy's and the person comes up to you in Macy's and says, hi, sir, do you need any help? What's the first thing you say automatically?
No, I don't need no help.
No,
right.
I don't need no help.
Right.
Now, in reality, when you went there, you were looking for something. You looked lost. That's why they came up to you. You do need help. You're a liar. But we've been trained to say no, right? So much because we're afraid of getting taken advantage of. We're afraid of people selling us stuff, whatever it is, right? You say, no, I don't need any help. Then you wander around the store for 15, 20 minutes. You say, actually, I can't find what I've been looking for. And you walk up to somebody at the register that was helping somebody else. And you're like, can you help me? The person on the other side of the store is like, this bull, I've been asking him if he needed help, right? So if you need help, go to somebody who has either been through it themselves and they came out of it on the other side in that area of their life that they need help with, or somebody who that's their job. I don't need y'all following all these gurus because some of these people pump faking fraud-tastic. You know, we renamed Clubhouse Cap House. You know, Instagram ain't all things that glitter ain't gold.
Right.
You want to go to somebody who this is what they do for a living. When people come to me for advice on how to get approved for a loan, I'm giving them just advice financially indirectly because the things that people that have good financial habits do are the things that help you get qualified for a loan.
Facts.
So if you look at your financial situation, you say, man, I don't like where I'm at. I don't like the car that I'm driving. I don't like the place where I'm staying. I don't like this. I don't like that. If you stopped and went in 100% the opposite direction of what you've been doing, chances are that's probably what you need to do for you to reverse your situation. So what can you implement immediately? If you are the type of person that doesn't have a budget, maybe you need to add a budget to your life. If you're the type of person that spends everything you get and then you save whatever's left over, maybe you need to save or invest whatever you get and then spend whatever's left over. And if you start doing that consistently, you're going to look up and you're going to say, wow, a year from now, 2 years from now, 3 years from now, 5 years from now, my life looks different. I promise you, I've done it. Anthony's done it. These are real life things. This ain't no cap house. It's not no shortcuts. If you have good habits, that's the secret. And it compounds because you start getting that energy. Like when you're responsible and you do a project or you manage, you get a commission check and you manage that money well and you invest it and you watch it grow, don't you get a sense of like fulfillment out of that? You're like, man, this is nice. I like having money in the bank.
You get the urge to want to add to it, to keep making it better.
So the same high that you get from spending money, you can get from saving and investing. I promise. I've gotten it.
That you said it, because that's what it is. It's a feeling that people be chasing. We all chase it.
Chase that new feeling. Chase that new feeling. You like to taste it. If you like to taste the Hennessy, maybe you could get into the taste of kale smoothies. It's different. But once you do it, maybe it can be for you.
Don't be talking about my brown liquor. Don't be talking about Look, you see, I'm trying to do good. I've been hydrating. These last couple of IGs, I ain't been doing no liquor. Just water.
Listen, I gotta get it together because I've been out in Southern California. It's been some eats I've been partaking in. So when I come back this weekend, I'm gonna be right in the gym. Rodney puts pressure on me. He'd be like, "How many pull-ups did you do today?" I'm like, "Oh, I didn't do enough." He's like, "Hey, well, I did 60. You better get your weight up."
So a highly motivated. So one, we are saving this live. Two, highly motivated. So again, Mark, I'm no credit expert. Mark said he's no credit expert. However, if you connect with either one of us, I'm sure we can help you. I do free credit consulting. So if you schedule a time with the link in my bio, I can do a credit review with you to give you like what the things that may help you or what may be hurting you.
And somebody who does loans for a living personally, I probably have seen more credit reports than anybody combined. I've literally in the last 2 years probably seen about 400 or 500 credit reports. So I see what it looks like for the people that have this stuff together. I know what those habits look like. I know what it looks like when you don't have good habits. I know the things that mortgage companies are looking for because of the rules that we have to operate with when we're approving you for a loan. So if you want to book a discovery call with me because you have some quick questions, I'm happy to answer. I also would encourage everybody to go down my timeline and check out some of the videos I posted because I give my best game in my IG lives, in my Instagram videos because my video guy says that I'm not allowed to do videos for longer than a minute if we're posting them on Instagram. So I got to give the most game possible in the shortest amount of time. So I follow Anthony, look up the game, check out my YouTube, all that.
What's your Instagram information, Mark, for those who don't know?
marc.loans, marc.loans. If you go on my Instagram, it also has links to my YouTube channel. And if you Google me, Mark Brown, LinkedIn, I even post videos on LinkedIn. I'm trying to educate people because, again, when I was a young idiot, nobody grabbed me and said, hey, you work and make money. If you were to do this in 20 years, heck, in 10 years, you can have a lot of money and a lot of assets. So I had a period in my life where I was tricking it off and messing up my credit and doing everything else. Once I got into this business,
Mark,
what's that?
it ain't tricking if you got it.
I guess I was tricking it off. I was tricking it off. I was tricking it off because I ain't have it sometimes. I was charged into the game. You know, one of our real estate friends recently posted how he got his Amex back, right? And I got an Amex. Was it last year? Maybe the year before. No, it was a year before. I think I got my Amex like the end of 2019. I had an Amex when I was like 21 too. I had the gold. I didn't have the platinum. I had the gold.
Okay.
And I tell me nothing. And then, you know, I had some challenges, and then they were like, yeah, you can't have this no more. So I never paid them that money back though. They just had to hold that. They charged that off. You know, my new card has 2019 on it. It doesn't say 2003.
You back. They let you back. You back in the game.
Yeah, they let me back, but it took some emotional and financial healing on my part for me to get back to that place. You know, our friend, he makes a lot more money than I do, so he paid him all that money back. I was like, yeah, man, you're not getting that. I'm sorry. Look, we gotta chalk that up. Amex, y'all doing all right. We gotta chalk that up. But I wouldn't recommend that. I wouldn't recommend that. That was a long journey for me.
That's the old Mark. The old Mark.
Old Mark. That was the old Mark. They were like, hey, you owe us this money. I was like, yeah, man, I don't have it. You know, that's wow. That's unfortunate. They're like, well, we're going to charge it off. I was like, well, you know, sometimes you got to charge stuff off.
Yo, but Mark, before we go, so we got the credit, we got the discipline, we got the habits. We also got the patience. You don't got to do it now just for the sake of doing it, keeping up with the Joneses on Instagram.
Right.
Give us at least 3, because you always somebody that give me a couple. Give me like at least 3 books for us that we need to add in our arsenal for this year.
Ooh. So I would probably start off with the book that we talked about. It's by Harry S. Dent. It's called it's like the upcoming fire sale 2017 to 2019. Just search Harry S. Dent, just like it sounds. Harry, middle initial S, last name Dent, Dent.
Okay.
He has a that I think is valuable because it's just talking about stuff that is, like I said, above my pay grade, but explaining it in a way that I can understand. I'm not stupid, but I'm not the smartest person ever either. And I could understand that, and it made sense quickly. I would also recommend, a lot of people I'm sure have recommended this, The Richest Man in Babylon.
Fire.
I mean, you can't go wrong with that, right? The Richest Man in Babylon talks about the most basic of concepts that you could teach the kids and how to manage your money. And if you adopt that mindset and employ it in your life, you can't lose. And this is just because it's one of my personal favorites. This isn't really a financial book. You could apply these principles. I'm a big fan of Stephen Covey's 7 Habits of Highly Effective People.
Right. You could use that across the board in life.
Oh yeah, for sure. Because one of the biggest concepts that I took from that I still employ, and I think this is one of the reasons why we get along in business, right? Is win-win or no deal.
It's got to be a win-win.
Right. Win-win or no deal. Like a lot of people, they come into relationships, business, partnerships, even meeting a stranger, and they say, well, the only way I can win is if you lose. Nah. How about you win and I win? I want you to win. Then let's not do it, right? So for me, when I'm talking to a client, that means I can help you out. You know, as a result, I get compensated because I'm, the company that sponsors my license, they make a lot of money by doing mortgage loans, a lot of money. And so they pay me a commission. If you help somebody buy a house or sell a house, you get paid a commission, right, for your time and your expertise as somebody who's taken some lumps in the game and learn from those mistakes and help guide people through the process, right? But that's a win-win. If I'm talking to somebody and they feel like I'm getting over on them or taking advantage of them, well, I don't want to work with you. That's not going to work, right? If you were working with somebody and they said, hey, I don't like this, you're like, well, then we're not doing it. That's it. That's the whole conversation. We're not going back and forth about it. You know, I had a conversation with my branch president the other day because I'm super busy right now. This is the busiest I've ever been. Like I'm literally taking more phone calls now for people getting loans than I would normally have in the middle of the summer. That's
Right.
how busy I am. It's a beautiful thing. Look at God. But I said, hey, I need help. I need to hire a whole person right now. And she goes, well, if you want to, you know, the guy that helps me out, I think he has a little bit of extra time. He can help you out. Let me see it, what he says. And so she came back to me and said, hey, I talked to him. He said that he would be willing to help you out, but, you know, you got to pay him X amount per file that he helped you out on. I was like, okay. She goes, well, do you want me to go back and counter? I was like, no. If that's the number that he said, that's what I want him to get.
Right.
Because I don't want him to be working on my files and be like, I got to work on another file for this dude that didn't want to pay me what I asked for. I'm doing it for a little bit less. No. If this is what you want, this is what I want you to have. You know, win-win or no deal. So I love that book. Stephen Covey's 7 Habits of Highly Effective People, Richest Man in Babylon. And just because it's fresh on my mind right now, Harry S. Dent's book, I wish I knew the title of the book. We could post it in the chat if I found it, but I don't have the picture in front of me right now. And I don't have my life because I'm out here.
And then, go. Was you about to say something?
No, that's it.
Oh, and then last question for you. The audience wants to know, what company do you work for, and do you ever plan on opening up your own brokerage?
So the mortgage company that sponsors my license is called Centennial Lending Group. We have an office in Maple Glen, Pennsylvania, and then offices like up and down the East Coast. And they're actually a DBA of a larger company, Success Mortgage Partners, which is a pretty big mortgage company. They're not huge, not like my last company, but they're a pretty good size. They did about $2 billion and some change in loans last year. So, you know, they're making a little bit of money. And they're based in Michigan. Will I open up my own mortgage company at some point? Maybe. I don't know. That's a lot of stress. Like, I know, you know, we both have friends that own their own mortgage company. That's a lot of stress. They got a lot of stress in their lives. I like to help my clients out and get bigger, right? My goal for this year, last year, I think I helped about 78 families buy a house or refinance their house, right?
Salute.
This year, my goal is to do about 4 times as much. So I want to help about 240, 250 families buy a house or refinance a house.
Okay.
If I'm also responsible for like licensing and compliance and attorneys and hiring people and training them up to process files, that's a lot of work. I wouldn't be able to put as much energy into helping more families because right now, a lot of people need help. And unfortunately, we both know there's a lot of people in the marketplace that they don't put the same care into their craft as you and I do. And
right.
So you got a lot of people that's running around like, oh, you need a loan? I do loans. But they don't really work on it. Oh, you want to buy a house? I sell houses.
Right.
But they don't put the craft in.
Failure.
Right. And so they're setting people up for failure. And one of my goals is to become a louder voice in the marketplace so that I can help more people out. And some people I help out and they don't even work with me. And I got to accept that. I'm not tripping about that. You know, there's some people I talk to and I tell them not to work with me for whatever reason. I had a person call me today or text me today that was trying to buy 2 properties in Harrisburg. And they were like, hey, I'm trying to get 2 properties for $90,000. Can you help me get the loan? And I was like, our pricing's horrible for a loan that small. You'd be better off going to a local bank, you know, and they're going to give you better terms. And they were like, wow, thanks. You're not just telling me to do the loan with you because you're going to make money off of it? I didn't even know that people did that. So you got to have people in your corner that want to see you win no matter what, whether they're going to make $1 off of you or not. Now, at the same time, you know, I reclaim my time often. If you're an asshole, right, I will forget to call you back. Don't be an asshole.
Politely decline.
Yeah, if you're the type of person you want to burn me up. Hey, Mark, I got 85,000 questions for you, but I'm never going to work with you or listen to your advice. I just keep asking you questions over and over again. Right. Hey, I know what that sounds like. You can miss me with that. I duck, dive, dodge that. You know, I'm like Neo in the Matrix with those. But I try to be a resource. That's why I put out so many videos. Like I keep a videographer on retainer so I can do those videos and post them every week.
Which is super dope. So definitely connect with @mark.loans. for your finance options, purchase, hard money, and refinancing. And then, of course, you know, if you want to buy, sell, real estate, Pennsylvania, New Jersey, Delaware, Maryland, get with us, the Good Neighbor team. Mark,
Hey.
you got any closing remarks for him, Mark? Or are you good?
No, man, I think we went over a lot in this call. I would say, you know, Gary Vaynerchuk always says something that I really like. He says you got to have patience in the macro, but you have to have the sense of urgency in the micro, right? So every day I try to get up with some intention, right? I have goals that I'm working towards. I have things that I want to do in business. I have things that I want to do for my family. I have things that I want to do financially, right? I'm working on those goals. But I also know that Rome wasn't built overnight. Right. So you gotta have patience that like you can get a lot more done in 5 years than you give yourself credit for. Like you knew me 5 years ago. 5 years ago, I was lost in the woods. I didn't know how any of this stuff worked really. I was just figuring it out, touching the walls a little bit, right? And I didn't really have two nickels to rub together, to be honest with you, because I had a financial reset. After I left my old career, when I was working in the gyms, I had came into the mortgage business with no knowledge. I didn't really have a lot of money. I was figuring it out. I was working crazy hours, sleeping in the office, all types of wildness, right? Sleeping in my car sometimes, not because I was homeless, but I just was a workaholic. But I got to a point where, you know, my work ethic made up for it because I was willing to outwork the next person. Right. And now my knowledge is starting to catch up a little bit to my work ethic. I still feel like my knowledge can always be tighter. So don't underestimate what you could do in 5 years, and don't feel that pressure like, it's got to happen right now. But you still got to wake up with intention and work on it. You can't just wake up every day and be like, oh, it'll be tomorrow. Oh, it'll be next week. Oh, it'll be next month. Oh, it'll be next year. You got to do things every day where you're moving in a direction. You might be crawling, but you're moving in a direction. And if you do that, I promise you a lot of magical things can happen in your life. I promise you. I'm in Southern California. I've never been busier in my business ever, and I've been in Southern California for the last month, enjoying the sunshine like 6 out of 7 days of the week. That's a lovely thing. I couldn't have did this 5 years. Huh?
I said, talk it. Tell them.
Yeah, man. Listen, it's a blessing. I'm a little bit salty about having to get back on a plane, but I'm coming back because I want to, not because I have to. That's a beautiful thing to have that option. And I'm still able to help people out and still able to run my business. So whatever your goals are, it can happen for you too. This isn't just some rah-rah, fluff. This is like real talk. Like you got to work towards it. Like you can't just hope and wish and pray. You got to work. But if you plan and work and listen to people that have your best interests at heart, that know what they're talking about, you could, you know, get the cheat codes. Like I didn't have the cheat codes when I started. I had to figure a lot of things out. Right. Now I try to resource and give people the cheat codes so that you can compress time frames.
Well, we definitely appreciate you, Mark. Like I said, it's always wonderful getting game from you, Mark. Like you said, you're not that much older than me, but you know, you're definitely a wise young man. So, you know, I always appreciate the motivation you give. And it's all right, man. It's all right. You good, man. You know, that's why they got, it's hat season anyway, Mark. We got to get you a couple.
Hey, I don't want to be hat season. I'm a tropical person. That's why I'm in California. I was soaking up the sunshine. I'm going to have to get on the plane, fly back to the brick weather, and then I'm going to have to be out here in the world covering my skull up because, you know, I don't have any here to keep my body heat in. But I'm happy for you, though. I'm not a hater. I'm happy for you.
But look, I got the beard. See, I don't got the beard, so it's cool.
I do. Listen, I see you noticed that. I got some growth. I've been using the juices and berries.
Yo, man, you crazy, man. But definitely safe travels, man. Looking forward to getting with you when you get back, man. Definitely keep doing your thing. So again,
it's a lot of people that need A. Lee in these streets to help guide them, and the team to help guide them. So we're gonna put together some things this year. I think that'll be really valuable for people because, like you said, you learn some things. I learned some things. We're able to come together and put our knowledge together and put it out there for people and be a resource for others. So any way I can help people out, I'm happy to help.
That's a fact. So don't forget next week, especially those who were asking about credit. We got one of the young credit champs coming through next week, Newt the Entrepreneur, at 8 p.m. We'll be back talking about credit, real estate, business credit, 0% interest credit cards, all that good stuff. So stay tuned. Don't forget, guys, hit the link in my bio. Check out some of the resources. Schedule your consultation. Licensed in Pennsylvania, Maryland, New Jersey, and Delaware. So, you know, we making it happen. So, again, definitely appreciate you.
We're two now?
So, everybody on the team. So, you know, I'm Philly. Somebody on the team is Delaware. Somebody on the team is Maryland. Somebody on the team is Jersey.
Yeah, I added Delaware last year. I figured it was about time since I got a Delaware area code and my family lives there. I should probably get my license in Delaware. So I added that last year.
But, like, I'm honestly torn between, do I go to Delaware for school and land, or do I, you know, go ahead to, I don't know, Ardmore, Wynwood or something, you know?
Think about like Middletown?
Honestly, I don't know. I don't really want to do it because I have to drive. I hate to drive. So
true. That's the only reason why I don't live in Delaware. If I had my option, I would be as far out in the suburbs as possible, so I don't have to worry about parallel parking, get my car hit. Somebody almost took my car door off a couple of years ago on Front Street and then kept driving. They didn't care. They just kept it moving. I was in the car. I was like, oh, it almost happened for me. I almost died. So I want to be somewhere where we got off-street parking all the time, but a lot of my clients are in or around Philly, South Jersey, Delaware, so Philly's a good central spot because I can still help people in the county. I can help people in Jersey. I can help people in Delaware. But, you know, I'm working on being bi-coastal too. So, we never know. We'll see.
Look, I appreciate you, Belinda. I got to get you and Tracy on here, Belinda. We gonna set it. I'm going to have my people reach out to y'all people to get Belinda and Tracy on here because I feel like y'all got a lot of wisdom and gems to get a world too. So, you know. But, again, appreciate you, Mark. Safe travels, brother.
Indeed.
We'll be talking.
Yes, sir.
Thank you.
All right. I'll talk to you soon.